All right, so let me say hello and welcome everyone. Doug here with the LincolnList.com. Welcome to another edition of Stock Market Mutterings, the daily edition, which we just started on this week. So I appreciate your guys' feedback, your support. We're going to continue to do this indefinitely until I feel like it's no longer worth it. But helping you is always worth it. I always enjoy doing that because I know what this journey is all about. So this will be for the 10th, which we're closed. We're not trading, and that's nice. You know, one of the things is I see all these people always out there on the social media. They really hate when the market's closed. And they're always like, Money Mondays, I can't wait to trade. Bless their heart. Bless their heart, man. Because I tell you what, when I first started trading, this was like 20 years ago, in like 2002, 3, and 4. I was always that way. I'm like, don't close the market. I was so addicted. Like I just had to be in a trade. I had to have a trade all the time. Couldn't wait for the market. I was so obsessed. And I went away like year 4. And it's like the longer you stay here, the more you want the market to be closed. It really is. You're like, man, it's somewhere along the line. It goes from an addiction to a profession. And just like normal professions, like, I don't know if I like my profession. It's a crazy thing. It's a crazy thing that goes on in your mind. And when you've been doing this as long as I have, that's to be expected, I guess. So on that note, guys, enjoy your holiday. Take this time to study for you new traders, you aspiring traders, you struggling traders, those who are just trying to get over the hump. Take this time to study. I know I talk about it all the time, but I got a free DVD. It covers the basics of chart patterning, scanning, everything you need to know just to really build the right kind of trading base. I'll post the link up on the screen. Check it out. You can start watching it right now. No strings attached. It's totally free. So I want to go back. And because this is the one that's going to end the week, I'm going to talk about how the week went, what was working, what wasn't working. And then I'm going to try to figure out what we can do next week here. What's the right plays that we should make? And if I could sum up this week, I would say it was profitable. I'm not going to complain. But I tell you what, I had to fight for every single penny. I mean, every trade was like, just Monday was a smooth day. When I first did this market money, I had one trade on the SPY, I hit it perfect. The rest of the days, it was just fighting back and forth. You know, we saw some wild volatility here at some points. And what I really want to say is that no matter how long you're in this, every once in a while, you get shook like a rook. The market will pull one on you and trick you. And I am not too proud to admit, I know other people won't because they always want to act like they knows it all, right? But I got fooled, man. I got fooled, and I think it was the Tuesday the Tuesday sell-off, that big old sell-off late in the day had me thinking, well, I guess we're going to go back and test the range. Yeah, this Tuesday sell-off right here. I was thinking we're going to go back and test the lower range. So let me just kind of do this again here so you guys don't get confused. I want to move these charts down a little bit lower. Here we go. So last week where I left off, I was talking about the bottom of this range and the top of this range. And if we were strong, then opening up on Monday, that's what's going to happen. We were going to trade back up to the upper range. And that was these 264. Let's just say 260, yeah, 265. Let's just say 265. And that was a pretty good resistance point. We had spent a few days there a week or so ago. And that's exactly what happened. And I captured most of that move Monday. I mean, that's where my week was. I captured most of that Monday. Now, this gap up, when I did the other market monitor, I said, this is why I hate gap ups, because most of the time they don't sell. But this was one of those rare cases that it did. And I think I mentioned it in that market mutterings that this was like the biggest retracement in market history, where the market had never been up 1,000 points and gave it all back. And in this case, it almost did that. And that was gnarly. So I'm thinking, okay, well, you know, maybe we're going to trade back to the bottom of that range. Well, the next day we just kept going. Then they did the old $2 trillion stimulus here later. I mean, the Fed's just throwing money. You got the Fed at your back right now. Let's just say that. So what really threw me off was Tuesday's action. It kind of gave everyone, I shouldn't say everyone, let's just say me. Because I don't always worry about everyone, I worry about me. And it gave me the impression that we were going to test some of the lower ranges, only to just hightail it and start ripping. And it pretty much was a bullish week. And why this is important, as you guys kind of know it, you know, it's always important to get into the right kind of rhythm. Nobody really talks about the rhythm. To me, that's important because here's what I mean. If you start out the day and you have a couple of plays that are like your top plays and you miss them, maybe you got distracted, maybe you froze for a moment and you miss them, it's sometimes so hard to just chill out, sit down for a minute, wait for another setup and try to make the best out of the day, or just quit if you're really pissed off, right? And it's hard to make that adjustment real quickly. You got to do it, but it's not an easy thing to do. So when I get sidetracked like that, it kind of throws me off a little bit, and I'm not at my very best. And it takes me a little time to adjust. That's what I'm saying. And that's what happened here. The week was good, though. I'll take it. But anyway. Now let's talk about what we're going to see here. This was some strong days. I mean, if you start moving up higher, I mean, you're going to get to this point where I think people want to chase this rally. Because what's happening here is, with the Fed making this stimulus, this is something, let me try to put it this way. This is something that normally takes months, if not a year, to make economic changes. And here's what I mean. To lower interest rates, it's like a quarter point here and there, right? They might drop it a quarter point here, a quarter point there. They want to do a stimulus or something like that, QE, whatever they want to call it. It comes by every so often. But since this coronavirus, this last couple of months, they've just damn near cut rates by like 2 points completely and thrown trillions at a stimulus. So they've condensed all of this firepower into a short period of time. Some people are overlooking that. So what normally would take years to develop has now been crunched in to just a couple of months. And I think that's the consensus now, is that the government will print as much money as necessary and do what's necessary to stabilize the markets. Yeah, that's the way it looks. So technically speaking, if you stay above 265s, we're going to continue to be bullish. We are going to stay bullish. And that's that. That is that. And maybe you start seeing 280s to 300s. Well, let me take 280s, what I was thinking was today. We're already at 280s. You possibly could see 300s again. And I think if you get a whiff of 300 on the SPY, you're going to hit 300 because it's just an emotional number. It will be a big sign of victory for bulls. And people are going to want to be in the market. And they probably got some cash on the sidelines, so factor that in. Now, if you lose this 265, you got 250 down here below. 250s, mid 240s from earlier, last week. Yes, last week. Watch those to the downside, because if you break through that, then maybe that we'll test the lows again theory comes in. But right now, the way it looks, the way it closed, anything can happen over a 4-day weekend. It's pretty strong right now. And most of the stocks that I'm looking at are bullish, but that doesn't mean they're going to stay that way. So here I'll give you some individual names that I'm looking at and some chart setups that I like. So I talked about OKTA here. I mentioned this one, I think it was yesterday. Boy, this daily chart. And the thing with this is it's got relative strength against the market. While the market was grenading itself and imploding, this thing held up really well. Yes, it sold off $40 a share, but considering how far it has come over the last year or so, that's not bad. And here you are. You're at like one parabolic FUBAR day, close to all-time highs. I mean, just $12 off. And this thing has just been relentless pretty much the entire month. So I like this OKTA. It would be nice if some of these would trade sideways for a day to give you a little bit better reference point. But that was also my topic yesterday, was the point and shoot market. You're not getting very many setups. You have to stretch out a time frame to see it clearer, because you're just getting straight down, straight up, straight down, straight up, and all that kind of erratic movement. But I still like OKTA. I didn't trade it today. I'll tell you one that probably looks a lot better. Some of these I've already mentioned, and I'm going to continue to trade them because I think I've got a handle on these names. And I want to trade the names that I'm familiar with. You got to be, this docu has been the trade. I mean, every time you get a dip, every time you get a pullback, you just got to buy some docu. If you're a day trader, just get you some of this stuff and cash it out at the end of the day. I mean, look at all these wicks on the bottom the last few days. It just doesn't want to go under 85. It's like every time it gets down there, it just gets scooped up with authority. So really, really strong here. Watch for this move, 91 bucks. This thing goes through 91. It's going to probably go right back to the 98s. And it's probably going to do it pretty quick. And if the market is not dumping, then, I mean, this is a great stock to day trade, probably a good stock to swing trade. So I like some docu there. Lulu, same thing. I mean, I'm looking at tons of flags. I'm just giving you some names that I have on my watch list. I'm sure your watch list looks the same. That's why I've mainly been trading the market outside of just regular stocks. I like trading futures anyway, but Lulu, same thing. This is like my BABA trade I was talking about last week, saying don't gap up, stay here, nice and close. Look, he's got a triple top sitting here, stretched out on the daily over the last 2 weeks at 205. You moving through 205, got rejected at 206, but I think the only reason it did that today was it was just too much. I mean, it was already up $9, and who's wanting to buy at $9 on a Friday, regardless of what the chart looks like. But watch this one. Free and clear. Actually, you can go back and say that's multi-month resistance there. You get through that, you're clear to the 220s. I mean, there is mega space still in these names. So don't think that you've missed out on the rally. If it can confirm through the rest of the week, there's still tons of upside left. You don't have to be the first one to a party in a situation like this. You know, like I say, pick your shots, use your stops. And then ZM is another one, just like a docu, been performing really well. And the thing with this one is you had some bad news on this stock earlier in the week, if I can remember it correctly, and don't fault me if I forget, because I'm at that age where I am forgetful. But I think they said they were getting banned in China or something like that. I'm sorry, I don't know this off the top of my head. What am I going to do? But it just shook that off. I mean, it dumped there and it shook it off. And look at it curling right up out of the bottom here. I mean, it's just basing and it's just ready to blow. Ready to blow. And I'll tell you what, if it goes over 125, 26s here, man, nothing's going to stop this monster till 140, 160. So, I mean, anything can change from now until the market open. But what I'm looking at is everything has flagged. And even though the market's made an incredible recovery and maybe it needs to digest some of this logically, you don't know what's going to happen. And there's so many bullish charts out there, and they have still, even after this rally, they still have so much upside potential. If the signals are there, the signs are there, we can't worry about whether we think we're not taking coronavirus seriously or whatever it might be. Let's just watch these. How about that? So, in a quick rundown, OKTA, Docu, Lulu, ZM, all of these look like longs. I can completely change my mind Monday. So I'm going to leave it there. I hope you guys had a good week. Not only do I have the DVD, but come trade with us in the live trade room. I do this on screen all day. I've been doing it. I'm almost a decade. I'm almost into the decade into the service business. Can you believe that? Gee. Yeah. Where does time go? Anyway, guys, thanks for watching Market Mutterings. If you have any tips, comments, or suggestions, just send them out to me. I appreciate your support. Like the video if you like it. Subscribe to the channel to keep up to date with the other stuff. Tune into Happy Hour tomorrow where I've got a really good topic. I'm going to be talking about when to walk away. It's going to be great. So anyway, guys, take care. Till next week.